What is up, guys, and welcome back to another YouTube video. Today we're gonna be reviewing the NASDAQ. So the NASDAQ. Let's go. Starting from the weekly time frame, right? You can see that we're getting this descending type of formation, which is a descending channel, and the descending channel indicates a reversal to the upside, right? However, we're still anticipating to receive a third touch, perhaps somewhere down here, right? It might not go all the way down there. It might reverse these areas here for a double top, double bottom, and then shoot back up. But then we're just anticipating the price is gonna go down, and you can see how this weekly candlestick closed this last week, right? It's also indication that price has been rejecting and might go down. Okay, let's go down to the daily. With the daily, we see the same thing. It's still a descending channel, right? And now it's much clearer. See our first touch here, our second touch here, and it keeps bouncing off. It keeps bouncing off. That's the reason why we're a bit more confident that it may break to the downside. Price may break to the downside, right? And then here at the bottom we go first or second, anticipating a third touch, right? After this third touch, we're gonna anticipate a third touch here and a break to the upside. But then remember, the market may play out differently. Maybe we might have a double bottom here, then we go back up. We're just gonna see what price is telling us and capitalize from that. Alright, now going down to the 4 hour, right? Now with the 4 hour, um, we evolved the market. Let me show you how we evolved the market from the previous structure we had to this current structure, right? So at first the trend line was moving somewhere here, right? It was moving somewhere here, and then it broke the trend line. But then check how it broke the trend line. It broke correctively, and it kept moving correctively even afterwards. And then all of a sudden it impulsed. Uh, but then the key thing here that made us evolve the market from this, right, to this is the fact that our price broke correctively. That's why we now evolve to the structure, right? And if you see the structure, it's in alignment with the bottom one here. So it kind of makes sense for us. That's why we're still anticipating price to go to the downside, right? And then let me zoom in closer. Here we had 80% of this moving correctively, and then all of a sudden impulse. The last 20% was impulsing upwards. So we really saw this impulse, but we didn't take it as a impulse correction and then move to the upside because we anticipating that since this is the 80% rule, sorry, the 80% rule, whereby 80% of this is corrective and then that last 20% is impulsive. Therefore, it does not invalidate the fact that this overall move is what corrective in nature, right? So we're still expecting price to drop to the bottom side. So after this impulse, price started playing around. So we had a impulse down. We wanted to take sells at this point, right? Where it had something like this. It's much clearer in the lower time frame, but then I just want to show you what we had. And then we're looking to capitalize, move to the downside. Unfortunately, it triggered us, it took us in, and then it took us out by going back up there, right? And then we let price play out. We also expected price to drop here. Unfortunately, it didn't. So we're just letting price play out, and so far this is what we have, right? It's been moving sideways. At this moment, as you can see, this impulse to the upside, I'm expecting a correction and then price moving all the way up there. And then from here, if it hits the third touch here, I'm taking this one, two, and then third touch here. I will look for selling opportunities, right? Whether risk entry or reduce risk entry. All I'm just doing is looking for selling opportunities. Let me come to the 1 hour time frame. All right. So here we saw price losing momentum here. So we knew that we have to be cautious with price. But I wasn't part of this. I was just watching price play out, right? Um let's see. Let me take my object tree. I wanna show you what I'm anticipating, right? Let's see this one. Alright. So it's possible that price may not go back up, right? And in the case that price doesn't go back up, I'll look to capitalize on the downward move from this point, right? Perhaps let it trickle, play around, and impulse outside. And then after impulsing outwards, I'm expecting a bull flag, a bear flag, sorry, a flag type formation, which is a continuation. And then I'll look to enter at this point for sales, right? With my stop just above there. And then I'm looking to capitalize on the move all the way to the downside, right? So that's one scenario, right? Let's see the other scenario. Let me hide this once again. Let me delete this. For this case, another scenario would be maybe price playing out in this manner. Let me take this piece of price action here. Alright, so I might look for something like this, the structure all the way at the top here, right? This type of structure at the top there. Oh, sorry. An ascending type formation pattern, right? So I'll look for my, this is a reversal type formation, so I'm expecting to get something like this, right? Before I enter trades to the downside, I'm looking to get something like this and like this, right? This structure may be here, maybe it may go touch there, it may go touch there, but what the strategy I use, the reason why it gives us an edge in the market is because at this point we're gonna just set a sell stop, right? At something like this, something like over here, and then we're gonna have our stop above this trend line, and then looking to capitalize on the move to the downside, right? So if price continues going up, it won't take us in. We'll remain, our sell stop won't be triggered, so we'll save again, right? In the case that sales were triggered and then another it hits our stop loss, just keep looking for entries from this type of setup, right? Now let me see another scenario that may have a scenario like this, whereby whatever happens, maybe it's not clear what's happening, right? So we cannot capitalize with on a on an uptrend, or we cannot capitalize from an ascending channel. We're just gonna look for price reversing and then look for the first one flag, first bear flag, and then we enter. Bear flags have high probability, so whatever bear flag we get here at this area or after the break here, we're just gonna have to capitalize on it and enter that, right? So yeah, that's it for my anticipations of the NASDAQ moving to the downside. In a case whereby NASDAQ moves up, right, we can anticipate a buy here. Perhaps we get a correction over here, right, and then an impulse to the upside. So we can capitalize on this correction that may form at this point. Since we have an impulse, we can expect a correction and then another impulse. However, I feel like because we're anticipating price to go to the downside, right? we can just wait for entry opportunities to the downside and let it and be patient and let it play out. Otherwise, of course, you can capitalize on a buy. And in the case whereby this buy may become a bigger buy in in the sense that maybe price decides to take this as a impulse and then this as a correction and then it's gonna form another impulse. It's still possible that price may play out like that. However, due to the overall bigger structure, I'm not anticipating price to play out like that. I'm looking for selling opportunities due to the message I'm getting from the bigger structure. However, if price impulses out, I'll just look for a flag type formation and capitalize on the move to the upside. And ladies and gentlemen, it's for me. I hope you liked it. If you did, please hit the subscribe button, the post notification button, and leave a comment down below. I really appreciate it. See you on the next one, guys.